Brandon, thanks so much for going through all of that with us for the last 20 minutes there. That's a lot of great stuff that we're going to unpack with a group of panelists that is about to come on now. I will let all of you that are watching just let you know that if you do have questions, feel free to send them along, and we'll try to work them into our chat as we go through this. But I think we can all agree, no matter what you do, if you work on B2B or B2C, we're all consumers at heart, and we have all seen how digital transformation has exploded in the last 18 months or so during the pandemic, and how our expectations have just changed for how we interact with businesses every day. And that is definitely trickling into B2B at a rate where it needs to be addressed now. So let's talk more about this with our panel of experts who have joined us. So Brandon is going to stay on with us to have this discussion here, but I'd like to also introduce you to three others. Dina Vardanotis from Payments and Partnerships, Mattis Korn from MGI, and Adam Coyle from Digital River. Welcome to all of you.
Thank you.
Thank you.
Yeah, thank you.
Great to have you all here. So let's get started by talking a little bit about this shift to B2B e-commerce that has been staggering over the last 18 months. Brandon gave us a bunch of stats on how much that truly has accelerated. So we know that there are opportunities that abound, obviously, but we're seeing a lot of pain points and issues on the other side of that, from supply chain problems, business ID theft that Brandon was just talking about, this idea of onboarding quickly or to the expectations of consumers and digital invoicing. All of this is kind of converging at one time and is fairly challenging. So I'd love to hear from our other panelists to kind of build on what Brandon was talking about, how you think a payment strategy can alleviate these issues so that growth can really continue. Who wants to start? How about Adam?
I'll start. I think we're
Pick
all,
on Adam.
I don't want to step on each other, but obviously there's a lot to unpack in that question. Clearly having, as Brandon alluded to, there's been sort of an unprecedented demand or interest from in the B2B marketplace for new ways to reach your customers. And I think the pandemic has accelerated a lot of those trends. They were clearly present pre the pandemic, but the pandemic has certainly accelerated a lot of the trends as people saw their normal ways of going to market effectively, stopped because of events outside their control, and particularly in the B2B market, where our businesses have been relying on a particular motion or a particular way of doing business. When those things stopped, whether it was as simple as travel being stopped, or it was as complex as their distribution relationships being frozen up, they began to look for other ways to go to market. And what we're seeing is increasingly that businesses understand that, as Brandon talked about in his presentation, they need an integrated solution to kind of be able to reach their customers where their customers want to transact with them online in a way that is both efficient, simple, and addresses all of the needs and wants that the customers have come to expect. And the payment strategy is necessarily a part of that. In many ways for two reasons. Number one, to meet the needs that the customers, the expectations that they already have, but also to introduce them to potentially new ways to pay, new ways to transact, new models that they can operate in as they look to develop that relationship with a customer. So it is not, I think I see it as sort of an indispensable part of an overall go-to-market strategy with, for business-to-business customers who are looking to sell online.
Yes, I think some very good points made by Adam. I think when I talk to clients, people typically get very enthusiastic about what's happening, what's going on, very growth focused, and the enthusiasm gets in the way of some clear thinking. So I think step one is align the strategy somewhat, or align your payment strategy with the overall strategy, and then figure out where potential pain points are. So you're operating somewhere, does that strategy does that go along in your future strategy? So if you go to new countries, obviously you may run into currencies, different payment methods. Can your bank account function there? It can be very day to day what's happening there. I think Brandon hit on a very good point on the the company identity fraud or the onboarding fraud. How can you prevent that when you go to new countries and when you're expanding? I think all good questions to ask in advance before just doing something in your enthusiasm.
Mattis, do you, just to kind of follow on with that a little bit, we hear this a lot, at any time in payments. Folks get very excited about new opportunities. Like you said, there's a lot of enthusiasm, and there's also kind of enough knowledge to be dangerous, but maybe there isn't really the real thinking through of how much of a transformational change this is and how much you need sort of the right partners and solutions. I was just curious, maybe if you give, 2 or 3 tips, or there's a couple of things you always say, I'd be kind of curious about that.
So that's a broad question. I think number one is payment methods. Are payment methods are the payment methods that you currently support, will they work in the new countries you're going to? Something that I've seen in the past is a growing number of credit card companies buying everything on a card with the rise of a phenomenon called virtual cards. So is your card provider, is it actually also specialized in things like corporate cards? And I've seen companies pay a $500,000 phone bill on a card. But if you typically have average transaction volumes or average transaction sizes of 1,000 or 2,000, maybe that phone bill is flagged in the acceptance. So it comes down to that level of detail. I think I mentioned it before. Things like currencies. Are you able, or are your suppliers able to handle currencies? And it's handling them at the moment of acceptance when you sell something. It's also in the settlement. So do you need, another bank account? So if you're going from the US into Europe, in the end, in Europe, there is still over 10 different currencies. It's not just the euros. All the Scandinavian countries still have their own currency. In the UK, there is still the GBP, the British pound. So what do you need there? And maybe you find out that you're dealing with a lot of euros and you're trading in the UK. So maybe starting with a euro account and a GBP account it suffices. But it can also be very costly if you're changing all these currencies back and forth.
I would just chime in on that to say, one of the things we see, or one of the mistakes we see people make, I think, when they try and transition to taking, I'll call it, offline processes online, is to think they can solve all those problems. And sometimes they do that by saying, well, I'm going to just force everybody onto credit cards. But your customers want to buy the way that they're accustomed to buying. And let's be clear, most of the B2B world happens on purchase orders and invoices.
Yeah.
And if you can't mimic that behavior in a very, seamless way for your customers, they're not going to like it. And getting back to the original point is your payment strategy, and this is what I was trying to say, is your payment strategy really needs to mirror what are the needs of your customers? What are they accustomed to today? How can you make that experience better in moving to an online world, an online experience, rather than sort of trying to take stuff away? And I think what the market needs to understand, and as quickly understand, particularly for all of these people that are now kind of really embracing online channels, that there are tools out there that they can use to solve that problem, and that they can recreate the experience or the expectations that their clients have for a particular settlement window or settlement time frame or whatever, and just do it in a much easier, much more seamless and user-friendly, and as Brandon alluded to, kind of consumer-like way.
And I was just going to add that the pandemic sort of just shone a light on the fact that you had a workforce that all of a sudden became disparate in a very short period of time. So where we had and relied on moving around paper or emailing PDFs and scanning them and sending them around the office, that disappeared. And it really shone a light to the fact that why couldn't we onboard B2B customers in the seamless way that consumers are also used to? How can we get those workflows completely digitized? And, Brandon said, a PDF is not a digital, invoice, but the reality is, how do we take and really turn it on its head and truly re-engineer, not retrofit, but re-engineer the B2B processes to really be, like we said, consumer-like. And businesses at the end of the day are a bunch of consumers that are coming to work and trying to make, their everyday tasks much, much easier. So I think that's one of the pieces that I've seen with clients and success in just making it super easy for them to interact with their own customers, onboard them, making payments a loyalty play, a true loyalty play, because it makes it easier for their customers to do business with them.
Brandon, I'd love to get just your thoughts on that. How do we, with what Dina was saying, how do we balance that ease that is now required and necessary and part of consumer even B2B consumer expectations or B2B customer expectations, with the risks of things like automatic onboarding and ID fraud, again, when things are we're trying to move things much quicker? How do you balance that?
Yeah, I think the key to all of this is it can't be the last thing you think of doing. It can't be a background task. I think both Adam and Dina and Matthias have said this. It's got to be something you think of up front and either believe you have the skills, the capability, the corporate muscle, if you will, to be able to do it yourself. And if you decide that you're not able to do it yourself, then you need to find partners who can help you. Because this is a real challenge. It's something that you will experience. It's just really a question of time. And as we see more and more customers meeting each other for the first time online, they're not meeting each other through a traditional sales channel where there's a salesperson, or they're not meeting at a conference. As they meet online for the first time, as that volume goes up, that's where you acquire your customers. So you've got to become much more aware of the risks of doing so, and I think there's a role to play for partners to help with that. I think the other key point I'd make, Jennifer, is B2B interactions are definitely more complex, but it's not to say that they can't be solved. It's not to say that you understand all of the role players, and order to cash and procure to pay processes are generally well defined for business processes. It's not like they are new and we've never heard of them. And so long as, again, I think Dina made this point well, so long as you go into the idea of okay, I'm going to reinvent this in a way, or deliver it in a way that I'm going to proactively solve what accounts payable needs, I'm going to proactively solve what procurement needs, and what the ultimate buyer or budget owner needs. And those are the three main role players and stakeholders in a B2B transaction. And so long as you focus on that and how you're going to accomplish that, this is very solvable. Now, I think the key is, and what we'd probably leave you with is, you've got to decide whether you want to do all of that yourself, and whether that's a core competence of your business, or whether you want to work with partners, consultants, other organizations that can help you go faster.
So it's all solvable. That's the good news, right? So in theory, it's all solvable and you can meet expectations. But how do we take it that next step further? How do you build that true loyalty in this digital B2B environment? And what role within that, what role does payments have to play within that process? Mattis, maybe we'll start with you.
Yeah, I think the key, and I think Brandon mentioned this in the first 20 minutes. I think it's all about removing friction, and that's it's automating all these procure to pay processes, and removing the friction there, but also removing the friction from the payment methods. So once you've used the payment method before, you can very easily use it again, or by introducing I would say old-fashioned trust, which is you onboard the supplier once and sort of identify the buyer or the buyers in some cases, and you agree on payment terms. and you let them maybe even order over the phone or via another channel, whether that's a text message or WhatsApp. Even those things are automated these days in certain processes, and that falls back to trust. And then you have agreed payment terms, but that works, and then the whole flow is automated, and you remove an awful lot of friction, particularly in some of these more day-to-day purchases that people do that are not highly customized, and where there is not a long and complicated sales process.
Adam, same question to you. What are your thoughts about how we build that?
I completely agree. I mean, I think that the comment around friction is a really good one, because I think the key is making sure that you're going to meet the expectations that the customer has of how they want to buy and pay, right? But do it in a way that's much easier. And as I alluded to before, purchase orders and invoices are still a key part of B2B transactions, but they're clunky, right? And you can deliver a better experience for that functionality online. And I think getting to your question of how do you engage loyalty and stuff, I think that's it. I think people are bringing, people are bringing to the workplace the same expectations they have as consumers, and you can call this the Amazonization of the world. Amazon has created an expectation of how transactions should flow. And I think in the workplace, people say, why can't things work sort of like that? And as Brandon alluded to, obviously it's a lot more complicated, but there are pieces and parts of this, the transaction flow, the chain of the idea to purchase, to settle, to buy, to deliver, that can be greatly improved and have friction removed from them. And the businesses that are able to do that and make it easy for you to buy from them are the ones that are going to engender the greatest loyalty.
Yeah, I think, Jennifer, that, I touched on it in my piece of the presentation, but we really firmly believe that this idea of brand loyalty being replaced or supplanted with experience loyalty it's a real thing. And we've seen it in our consumer lives. I think we are starting to see it in B2B experiences. And so if you make it difficult for your customers to buy from you, whether it's the way you onboard them, whether it's the choices you give them at checkout, whether it's the optionality you might give them to have extended term, whatever it is, present the invoices to them in the fashion they want to receive them. If they have an invoice portal and they want you to load it in there and you choose not to, all of those sorts of things ultimately will make you harder to do business with than your competitor. And I think what we've got to realize is that bar, that tide, whatever analogy you want to use, that tide is coming in, and it is raising the expectations of what is considered normal for all suppliers.
And the only thing,
I know we've lost you a little bit, but I see you're back, and we're talking about true B2B loyalty and how to achieve it. So I'd love to get your thoughts on that.
Yeah, and Jennifer, your point around, it's all solvable, and whether we use or partner with an expert or doing it ourselves. I think what's interesting is sometimes you don't even know what the problem is. You have like that glaring view of the obvious problems, but then when you work with a partner, and you'll first had experience with TreviPay in really uncovering those real small moments where loyalty can, you really ratify a tremendously better experience. And so whether that's, wow, I didn't even realize that being able to see my credit limit in a digital manner when I'm sitting in store is such a value. So, it's back to that point where sometimes you don't even realize where that incremental value to amplify loyalty can really lie. And that's, I think, one of the benefits of working with a partner and really like pushing on some of the user experiences that make a true difference to our end customers.
So how do we address this issue of fraud more directly? Because I'm sure, everyone sitting out there is either for themselves or their CFO back at the office. You know, they want to move forward with these things, but fraud is always in the background. And Brandon, you talked a lot about business ID theft, which is one form of fraud. But we all know all these moves to very rapid, you know, move to e-commerce over the last 18 months or an expansion of it. We've also seen an uptick in fraud, of course, that's gone along with it. One, due to the volumes and, you know, due to some, you know, some new processes that companies are now employing. How do we think we're doing on fraud? Do we have a handle on it? Or what are the top couple of things that just companies need to keep in mind to make sure this doesn't, you know, become any more of an issue that they would normally already be dealing with? Brandon, I just thought we'd start with you.
I'll start with a couple, and I'm sure I'll let the team build on these. So, you know, we've spoken a lot about the identity fraud piece, application fraud. I think there's lots of tools, techniques, data sources, ways that you can bottom that out. I think the key thing with that I would leave the audience with is it's almost impossible to get this right if it's a paper-based application. You need to have the application be digital, because then you can gather all sorts of other digital identity information, like the IP address, the part of the world the individual is coming from, and correlate that with, does this make sense for where this application is occurring? And so, you know, simple example, if somebody is applying and they're outside of the US and they're applying for a local school district in the US, that's probably not okay. So you need to have these be digital first processes so that you can gather additional data from the devices, from the applications that the applicants are using. I think the second piece is there's a new process that businesses need to understand they need to support, and it's around when you offboard somebody. So when somebody leaves the organization, you know, you gather back their laptop, you know, you take the cell phone, but do you make sure you shut down the business buying account? So we see examples of employees who've left, who've been disgruntled or what have you, and they're still buying against the business account. So there's some new processes that businesses need to think about and need to make sure that they get in place and bottom out. And then last but not least, make sure that key elements around the configuration of an account are not things that can be done easily or without multi-factor authentication. I spoke about a couple of them, things like changing bank accounts, things like changing delivery addresses, things like changing credit limits, all of those, you know, and I mean credit limits for individual buyers, all of those sorts of things, you need to have a more robust process around. So if an account is compromised, the simplest way bad actors will compromise an account is they will change the delivery address and have it delivered to a generic warehouse, and then the goods are gone and you'll never get them back. And so I think those are some examples. I'll let the panel build on others that they might have seen, or, you know, other things to think about there.
Yeah,
I think.
Go ahead.
Go for that, Adam.
No, I was going to chime in on fraud. I mean, we talked a little bit at the outset about the number of people that are coming online, and businesses who didn't think they had a fraud problem may suddenly discover that they do. You know, you know, while you're the point I would make is as you think about moving online, you need to think about really working with experts and or third parties who can help you in that regard. Because if you don't think you have a fraud problem, you have a fraud problem. We see it come up in contexts where businesses will think there's no possible way I have fraud. The product I sell is so specific or so unique, no one would go and buy it, because they're only thinking that, you know, fraud only occurs in defensible product categories. And that couldn't be further from the truth. So, you know, recognizing that there's an issue there and that you need to work with people that are experts in managing that account takeover fraud, that, you know, credential verification, all those kind of components that go into a robust fraud management solution, I think are critical to the decision as you're moving, you know, to online and non-face-to-face transactions, where some forms of fraud were mitigated by the fact that you were, you know, perhaps dealing face-to-face.
Yeah, I think taking from Adam's points, completely agreed. I think there needs to be a maturity level that there will be fraud. It's inevitable, and make it a point that can be discussed. Because if you don't talk about it, it seems that it doesn't exist. And of course, certain products are more likely to attract fraud than others. And I think every now and again also be street smart. As Brendan said, if there's a change of address, just Google the address they want to use in the future, and you may be able to find out in 20 seconds whether that's a valid address or not. And there are tools, if people change the bank account, you can actually ping through certain suppliers, you can ping those bank accounts and verify if it's held in that name or not, or if it's even an active account or not. So that's to the point of work with the proper partners, but some level of street smartness, and just sort of go through the actions that are on the table and try to find out for yourself. And there are plenty of people online. And so there is an organization called the Merchant Risk Council that meets on a regular basis, both physically and online, where people from the business will exchange best practices around how to combat fraud.
And the only thing I would add is to the maturity point is it really truly helps if you have a platform that builds in those processes of, who's the backup, who's the, multi-factor authentication for this kind of task. So if the business itself from a maturity perspective hasn't thought through ways of managing, internal fraud or those processes like Brandon mentioned, when employees leave, if you have a platform that enables those things, it actually helps the business be better themselves at managing fraud. But if they're left to kind of their own devices and they're sort of building those processes offline, they're much more at risk of those pieces. But with a digital platform, it sort of forces that kind of rigor.
Yeah, makes sense.
I would overlay one other example, Jennifer, which is, if you are in any way, shape, or fashion thinking about doing this in multiple countries, the level of complexity just goes up enormously. Yeah. And it can be as simple as the data that you get from bank accounts and rules and regulations around things like ACHs and EFTs and how easy it is for them to be recalled and pulled back. Like you'd be amazed like what the matrix of complexity looks like when you multiply this by, okay, I'm not just doing it in the US as an example. I want to do it in Canada. I want to do it in Mexico. I want to do it in Europe. I want to do it in parts of Asia. It's remarkable how complex it gets so quickly.
Yeah. And if you're selling online, you are selling globally, right?
Well, that's why I bring it up, right? Particularly if you're selling a digital asset, right? If you're selling software or you're selling images or something else that can be downloaded, if you're selling a digital asset, by definition, you're probably selling everywhere.
Mm-hmm.
Yep, makes sense. Okay, well, let's close out by asking, kind of doing a round robin question to everybody. Let's put on your fortune teller's hat, and let's let the audience know, if you had to pick sort of one thing that's going to happen over the next few years, what do you think, where do you think a B2B digital first buyer's expectations are going to go? What are they going to expect? And second part to that question, how do we deliver on it? Mattis, why don't we start with you?
I think the whole process will be digital. There will be less. There will still be procurements and PO numbers and ERP involved and those types of things. But I think the approvals are all automated, and I think the actual buyer is more in control, which means it's more online and it's more competitive. And from a payment methods perspective, I think we'll see a switch from traditional cards to more new payment methods, like on terms with a bank transfer in the back end. And I think Europe is leading, but I don't think the US is too far behind in that. And I think we see it, mobile is at the center of the whole experience.
Dina, your thoughts?
Yeah, I mean, I just wanted to kind of lean in on the point of invisible payments. I think we are starting to already see that on the customer side, where you've got, certain buy now, pay later aggregating that capturing the value of credit. And I think, if I could look out, I would see that there will be some winners in the B2B space that make it super easy for larger organizations to do business. And so when, Brandon talks about that buy now button, powering that with all of the infrastructure underneath it, I think will be an interesting space for B2B in the broadest way in the future.
Adam, your thoughts?
Yeah, I think, and one that I'm very passionate about is the idea of the hybridization of B2B selling online. And I think we tend to think of online and offline as being binary, but what we're seeing is more and more B2B transactions becoming something of a hybrid, where you may have outbound selling, right? Or you may have even inbound selling, where you have some live interaction, perhaps some, I'll call it analog interaction, but then transactions being completed online. And for a lot of the reasons that I think we highlighted in the discussion today, the ease, the simplicity, the consumer satisfaction that you get out of being able to complete these things much more easily, more efficiently. And the key is really going to be creating that, I call it seamless process on the back end, to offer those buyers, who you might have interacted with over a Zoom call, and that's it, rather than seeing them at a trade show or flying across the country to meet them at their office. Wanting to be able to move from that Zoom call into maybe a configure price quote transaction online, and then ultimately transaction completion. So I think the real thing that's going to be interesting over the next few years is to see how our business to business interactions in buying and selling become very hybridized. You're going to see more and more of that, I think, and more solutions in that space to facilitate that.
So, Brandon, you have you're last. All the good answers are gone, so you're going to have to come up with something.
Well, I think that to Adam's point, to a lot of the points that the panel has made, one of the big friction points that remains is this: how do you onboard a new customer? And so I see the next several years, it might take longer than that, but I see the idea of a digital identity becoming something that is more normal.
Yeah.
And so if you think about the early evolution of the internet, the idea of certification authorities that evolved to make sure that the website you were connecting to was in fact the website you were intending to connect to, I can see that the analogy of that happening in this space, that businesses, individuals will ultimately end up with digital identities. And that will help in the onboarding process. It'll make it easier to validate that somebody, because you frankly need both. You not only need the identity of the company, but you also need to know that the individual who you're interacting with is allowed to bind the company. Mm-hmm. And so if we're to move to a world where this can truly be frictionless, you can meet online, you can within seconds know that this is somebody I trust and want to give a credit line to, as an example. The only way you can really facilitate that long term and at scale is if there's some notion of a digital identity. So I think that's coming.
That is a great point to end that discussion on. So to our attendees who are watching right now, we are going to move into the Q&A section here just for the last couple of minutes. So if you have any burning questions, this is your last chance to send them across so we can ask the panelists. And we do have one question from the audience, and that is, what are your thoughts on stablecoin payments in the B2B space? So who's interested in taking that one?
Well, I was just recently, I'll start. I was just recently at Money 2020, and it's remarkable, how much crypto you see, just everywhere. And so I think it's not a question of if, it's a question of when. I think it's going to become, a form of payment. And I think much like we've been talking about today, if you're going to meet your customers where they are, then there's a probability you're going to have to accept them and figure out how to do that. And so I think it's coming. It's just a question of when.
Yeah, I think we'll see, and actually already, if you look at consortia like R3, who are bordering on a fintech and who are in trade finance and acting as an escrow on releasing funds when goods are delivered. So then it's more the technology that's active. If you see how letters of credit from Eastern Asia, from Sri Lanka, where a lot of textiles are coming from, are still literally papers sent around by banks. Yeah, there is a lot of I think need for stable coins and crypto and to move online. On the more cynical side, I think in Europe and in the US, there is a decent financial system that works. And if you wire transfer money, it will arrive, and that $1 is more or less $1 on the other end, and a euro is a euro on the other end. The need is not as big. Plus, I think also part of the success is in stable. Some of these coins are not very stable and are fluctuating. So you might find that your margin disappears overnight. I don't think many merchants are too happy with that or with taking that risk. And we've spoken a lot about risk, but that could be a very unexpected risk.
Yeah, I would agree. I think there's a lot of novelty factor, and like Brandon, I was at Money 2022, and I was amazed at how many businesses were there selling to other payments businesses. The notion of accept these things. Stable coins might be a little bit of the exception, and particularly if you, as I get into the sovereign dominated, coins, as if you start seeing that more and more governments begin to issue their own, I'll call it blockchain enabled cryptocurrencies. Fundamentally, though, other than some of the escrow characteristics that might be built into particular solutions, none of crypto solves the fundamental problem of credit, right? And credit is something that is not, it might solve the settlement piece of credit, right? But that's generally not been the biggest challenge. Credit is money you don't have, right, today. That's what keeps the world's economy moving. And it certainly keeps the B2B economy moving. We see that in our business, and I'm sure Brandon and others see it in theirs. But having credit vehicles, new and modern credit vehicles that are low friction and meet the needs of buyers and sellers are, I think, the real key to the continued expansion of online selling.
Great way to end it.
Well said, Adam. That was incredibly well said. I completely agree with you.
Yeah, thanks.
Yeah, absolutely. Well, we've come to the end of our time, so I'd like to thank our attendees who watched the workshop today. Thank you so much to Brandon Spear for setting us up with that great presentation, and thank you to our other panelists, Dina, Adam, and Mattis. Very much appreciate you being here and sharing your expertise and insights. So that concludes our workshop. You can get a few minutes back in your day before you head on to the next one in 5 minutes. Thanks so much for joining us.